I'm Tim Kraus and I approve this video, even if I might not know what I'm talking about. I'm going to talk to you today about permanent life insurance and why your clients need it, and really why they should consider life insurance coverage as part of their overall retirement strategy. And I'm not necessarily going to talk about your traditional life insurance in retirement planning income type strategy. I'm going to talk about other reasons or other uses for permanent life insurance after retirement. Now, at financial brokerage, we sell a lot of term life insurance, right? And it makes sense. Whether you're talking about a traditional needs analysis, financial or capital, or you're using simple kind of more modern rules of thumbs like five times your income, 10 times your income. When you figure out how much life insurance a client needs using traditional methods, you're talking about paying off a mortgage, you're talking about replacing lost income, you're talking about funding a college education, you're talking about temporary risks for the most part. And so when you have a temporary risk, it makes sense to have temporary coverage associated with that risk, especially when term life insurance is cheap, and it's a great tool because you can get lots of death benefit coverage for pennies on the dollar. So when you talk about permanent life insurance, you have to go back and look at these risks and say, as I reach retirement age, does the risk of paying off a mortgage really still exist? Well, traditionally, the plan is to have the mortgage paid off or significantly reduced by the time you reach retirement age. What about replacing lost wages? Well, obviously, once we reach retirement age, if we've saved appropriately, our income is going to come from our assets and from Social Security. What about funding and education? Well, typically by the time your clients reach retirement age, their kids have already gone through school. So that risk doesn't exist as much. So you really need to answer the question, if they're going to buy permanent life insurance, the client's logical question might be, why do I need life insurance after I retire if these risks don't exist as much? And the answer to that is really the answer to needing permanent life insurance is there's a different set of risks. And I'll cover some of these just briefly. If you look at the risk of inflation, a couple turning 62 today, joint life expectancy is 30 years. So the cost of goods in the beginning of retirement is likely to be significantly different than the cost of goods at the end of retirement. Do they plan appropriately within their retirement income strategy, and do they have enough funds there to cover the impact that inflation might have on their income? What about increasing tax rates? If you look at what's going on today, not to go in too much depth, but we're spending more than we're taking in. The deficit continues to increase. Tax rates are also historically low. So it seems logical that at some point we're going to have to address that, and tax rates might increase in the future. So given that many retirement plans are in mostly 401k type accounts that are going to be taxed at retirement once I start taking money out, what impact is increasing tax rates going to have on my retirement? What about stock market volatility? If I start taking money out of those retirement accounts for income and the stock market is going up, well, the projections will typically look very good. But the downside is if I start taking money out of those same retirement accounts and the stock market goes down, well, then the projections typically look a little bleak. So do I have a different source of funds to use for income maybe when the stock market isn't performing as well? What about spending too much? Do I accurately anticipate what I'll actually spend in retirement? Given that, one, I'm going to have a lot more free time. Hopefully I'm still healthy, and I want to go out and enjoy myself. I might end up spending a lot more than I originally anticipated in retirement, or just unexpected house expenses, for example, can be very significant if you're talking about replacing roofs unexpectedly, or replacing HVAC system or equipment unexpectedly. having to paint a house. Things like this could be a significant expense of retirement that's not necessarily baked into a client's original retirement plan. Or Social Security income. If my spouse passes away, I don't continue to receive that check coming in, could have a significant reduction in Social Security income. So, I just kind of glanced over some of those risks. To do them justice, you'd really want to cover each one in a lot more detail to really understand them. But there are a few different risks that with permanent life insurance, using both cash value and death benefit coverage, I can take some of those risks off the table with a permanent life insurance policy. But what I think really, when you combine those risks with the next risk that I'm going to talk about, it really starts to make sense about why your clients need permanent life insurance. Not just want permanent life insurance, but why they really need permanent life insurance coverage in retirement. And that risk, that is the biggest risk that your clients face in retirement, is healthcare expenses. 52% of people turning 65 today will need long-term care services at some point. And it's not just the chance that they're going to need long-term care services, it's what happens when they need long-term care services. Because if you look at national averages today, you're approaching 6 figures on an annual basis for a private nursing room home. That's hard to plan for, and that's hard to take that risk off the table unless you have some sort of specific coverage that addresses those healthcare expenses. We could talk about long-term care insurance, and I think it's a great tool to use to cover or to take those risks off the table. But some of the objections that you commonly hear, and these are real objections, they're really hard to argue with necessarily from a client's point of view, and they're legitimate questions. Is it's really expensive. I've heard that rates might increase in the future, so even if I can afford it today, can I even afford it down the road with what might happen to the rates? Or what happens if I pay all this money and I don't actually use it? These are, we can overcome those objections, obviously, but if you think about it, those are legitimate questions that your client might ask you, and they are legitimate objections. And so the good thing is, with life insurance, in addition to all the other risks that we already covered, life insurance could have a significant impact on taking that risk of needing long-term care services and the expense that's associated with that, and take that off the table, because there's lots of different types of coverage available with permanent life insurance now, whether you're talking about chronic illness riders, true long-term care riders, more true linked benefit type products. There's great combinations, life insurance that have some sort of long-term care protection. And obviously with each one of your clients, you're going to want to analyze their situation and go in depth and match up the right type of life insurance policy with the right type of coverage for their specific situation, which is something that we can help you out with at Financial Brokerage, because we truly understand not only the differences and advantages and disadvantages between, let's say, a chronic illness rider and a true long-term care rider, but just because it's a true long-term care rider, not all of those are created equally. There's lots of subtle nuances and differences between those. Same with chronic illness riders, same with linked benefit type policies. So you truly do need to consult an expert to help you understand which type of coverage is the right type of coverage with your client. But I'll throw one hypothetical example at you and walk through it just to show you how a policy might work with a client's retirement situation and what risks it will actually address and what it will provide for them. Another offer that I'll throw out to you is we have a term perm allocation questionnaire that you can use with your clients in your sales process when you're setting up the need for life insurance coverage. And it's really going to help you kind of start or illustrate the need for permanent life insurance type coverage. And it really addresses 3 questions. 1, how much life insurance do I need? 2, what should be the ratio between term insurance and permanent insurance with that need? And then, assuming that I have a permanent insurance need, the 3rd question is, what type of permanent insurance is right for me? So you can use this allocation questionnaire to really get your clients' thoughts and feelings about what type of coverage might be right for them, and you can combine that